The ARCa Bulls team nailed the downside expectations, and now it's time to study the available signals to determine the direction of price action leading into next week. From candle analysis and psychology to options, flow, and physics, let's look at the good, the ugly, and everything in between for an edge. Welcome back to the channel on this Freaky Friday. This is ARCa, and let's dive into GameStop. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Please, let's go ahead and take a look at the GME Weekly chart. I'm sorry, I was going to give you the original option here to say, give me the bad news or give me the good news. Which one do you want first, right? So I'm going to make the decision here for you, and I'm going to give you the bad news first, right? But I will say, stick around for the good news because I do think you're gonna find this very, very entertaining. So let's go ahead and start here with GME on the weekly time frame. As you can see, this candle that we closed is a large wick, small body, red body candle, right? So this actually signals a potential weakness in the price action, right? So I'm going to go ahead and just display to you what this is. This is called a shooting star candle strategy, and that usually signals that the bears are presently in control and there could be a downside price action leading into this. But please remember the weekly time, as this is a very large time frame. It definitely takes so just about 7 days to complete the entire candle here, right? But if we're studying price action, if we're studying momentum, usually the way we tend to see things are in waves, right? So what happens in the immediate short-term time frame usually cascades into the larger time frame, right? So in this case, we are noticing here that it is a weekly time frame, so there could be several reasons for the price action in the immediate short-term time frame to cascade or to domino effect into the weekly time frame and essentially redirection that sentiment, right? So let's go ahead and change up the mood here and look at the first thing here for the good news. This is a falling wedge pattern. I know that a lot of you have been observing this on Twitter X, right? A lot of people have been circling around that stock charts chart that had this a falling wedge. This is the information here for you that I've actually taken the time to gather and apply here into the TradingView software. So please take a look at this falling wedge pattern. So this is a bullish reversal formation that has three potential reversals, right? Reversal targets. Now, we were already observing this on Thursday night, right? With the live stream. We were observing here that there could be a reversal here and there could be a bounce from the bottom regression. It got very, very, very close to failing the entire regression, but we were able to maintain that bottom side. Not only that, is that as you can see here in the drawing, the support or demand zone is actually paired with a very nice gap, right? So this gap right here ended up being the support for that price action to bounce from the bottom side today and actually got the top end right here and respected the upside regression one more time. It looks like we're closing right at the cusp of the outside and inside of the regression. And guess what? We are already at the 75% to the apex of this triangle here, which is usually the breakout or breakdown for positioning, right? So in this case, we are noticing that it is a falling wedge pattern, which usually marks off a bullish sentiment for price action. So take a look at it. Take a look at here, right? One of the leading and important chart patterns for the new traders is the falling wedge pattern. In any market, it is an extremely bullish pattern, right? So this is usually what happens, guys. We get this massive upside. Price action starts to converge here, right? We get that pressure. We build the pressure, and then there could be a massive explosion towards the upside. We have three targets to observe for this in about just a minute here. The second criteria to observe here for this falling wedge pattern is the volume profile. So take a look right down here. This is volume, and as you can see that we're actually getting volume falling, right? So that's usually the criteria to look at for this formation to tell you that it is in fact a falling wedge formation. Now let's go ahead and take a look at the volume profile as well and load up the moving average within this, because I want to show you something now. Look at this right at the power hour today. Look at the volume difference that happened here. We're starting to break out in a green volume bar from the apex right now, right? So that's already giving us a potential signal that there could be leading price action towards the upside in the immediate short term. All right, so let's go ahead and now put down to 3 targets for this, because we have several other things to look at and more things that are gonna potentially give you upper bound targets for your playbook, for your plan. Make sure to join the ARCa Bulls trading team so that you are aware of these targets and that you are aware how to play these targets, because I got to tell you one thing that a lot of my master students love that I say. It is one thing to call out the play. It is quite another to execute the play. So please join the ARCa Bulls trading team and we'll be able to display to you how exactly to do that. So right up here on your right-hand side of the screen, you're going to notice the Join ARCa Bulls Trading Team link, right? So I'm just going to go ahead and make a note right here for that. Make sure to join immediately, right, team? So let's go ahead and continue on with these targets. Let's just assume that we're going to be breaking out here on Euro Open, right? The Euro markets open on Monday, right? So let's just say that this is going to be our first target here. So our first target implied would be $24.42 from the present close post hours of 21.30, right? So let's go ahead and apply the second price objective, and that's going to be located at the 50% of the formation itself, right? So the first one is going to be at the breakout formation, or at the breakout position, sorry, and the second one is going to be located from the 50% of the formation itself, and then the third one is going to be located from the larger part and rear end of the wedge. So let's go ahead and apply that to the same place and see if we can get ourselves some targets for the potential future, right? So let's go ahead and note them down right now. So if you do remember this wedge from Thursday night, we were expecting a different type of breakout, but now that the price action ended up doing what it did over today, we were able to solidify and knock out the exact resistance and support zone for this formation. Okay, let's not waste too much time here because we have a lot to look at, right? So take a look at this. We're going to go ahead and note this at 24.52 secondary target. We're going to locate here at 29.46, and the third target here we're gonna locate at about $38.19. Okay, so this is so far the plan, or the trading plan here, for the upside targets. Right now, please remember one thing: this formation can absolutely play the downside too, but it is usually, and it is very much psychologically bullish. Okay. Let's go ahead and move on to the next formation here, because this is telling us a massive reversal signal as well. This is called the Bullish Abandoned Baby. I know, terrible name, right? But this is on a daily time frame, and usually daily time frames are extremely powerful formations because they are not in the immediate short term. So the larger the time frame, right? So this is a daily candle. It takes a whole day to finish off this candle, opposed to the candle that we looked at before, right? This is a 1 hour candle, so it takes an hour to close every candle, right? All right, so in this case here, yes, this is a full daily candle here that printed this first formation. We are now 75% confirmed for a bullish potential here, guys. So what I'm saying is that there could be a chance of a gap up into Monday here if we are to follow this exact formation right here, right? So take a look at this. Here's where I don't want you to focus on the stop loss and entry, because that's not my strategy. I'm not going to use someone else's strategy here. I just pointed this out here on my price so that you're aware exactly where I'm looking at, because yes, we are missing one potential bar located right about over here, right? So let me just go ahead and adjust the extension here. I'm going to make sure that it does not extend so that we're able to draw in where the next candle could be positioned, right? So this is that potential right here. So we're missing this candle that could be printed on Monday at a gap up. Now, it's not always the case. There is always a potential for this candle to look something like this too, which also would present a bullish continuation formation. Okay, so just for now, because of the distance that we're getting here from this Thursday to Friday, today's price action, this is why I'm putting together this potential formation coming in. Okay, there is no implied target or price objective on this formation here. Now, if you are curious, how does ARCa know all these formations on these candles? That's because I am an instructor as well. Okay, make sure to hit me up at ArcMastersCourse at Gmail, and I'll be able to give you the syllabus and disclaimer to my 19-week mentorship program that's now consolidated to a 4 to 5 week crash course mentorship. Okay, get yourself enrolled on this, because I'm going to be stopping enrollment here in just about a week, and I'm already getting some of the seats filled right now. So I want to make sure that you get in. I want to see you in the classroom. I want to see you right there present, so that you are aware of how to trade the financial markets like the institutions do, not how discretion does it. Okay, you guys, so ArcMastersCourse at gmail.com. Let's get your edge sharpened so that we can get you in the trading floor. All right, you guys. So yes, let's go ahead and now move on to the next formation here. And yes, this is another 1 hour formation candle, right? Just like this over here. This is the hourly time frame right here. So we're going to go ahead and take a look at another one on the hourly time frame, and this is called a cup and handle formation. Okay, this pattern here usually presents a bullish reversal, and it's coined by William O'Neill and introduced in 1988 into the US markets here. So let's go ahead and take a look at this, right? So check this out. The cup and handle pattern forms in all time frames, like a 1 minute, daily, weekly, and monthly chart. All kinds of time frames are you able to see this formation here. So it's actually visible from many. I just put this here on the hourly time frame so that you are aware that it's I just wanted to drop the grain, right? I didn't want you to see so many candles all in one shot. All right, so if we block the visibility from all the drawings here, take a look at that shape, right? You can clearly see it already. All right, so now as this price action declines here, you can see that price action is declining. Even here, notice that the volume profile is also declining. That usually means that the volume for the bear thesis is starting to slow down. That means that there could be a bullish reversal for this. Okay, so let's bring in the drawings here and observe the potential targets, because it tells you here how to measure that target, right? That's okay, but we have two other potential targets. Why? Let's block the visibility again. Look at this top line here. It is matched with this wick on the left. You see that wick on top, confluent to this top wick, right? Now, the curious thing is that we have an opening and closing basis of these candles very confluent to each other all the way across, right? All the way there. So we have two potential targets to look at now. We got to make sure to know how to bend the rules and how to make sure to observe the higher potential or the higher probability targets using these strategies, which I will teach you in the ArcMasters course. Okay, you guys, so let's go ahead and now map out those top end targets. So when you take this bottom side of the trend line, you want to make sure to apply that trend line to the very top end, just like this here. It's going to be 26.54, right? And the secondary target that we're looking at is going to be located right at this point here of 25.13. So that already gives us a range for us to observe. Why don't we just go ahead and draw a little bit of a box in there just so that we are aware over where price action is leading to. So if we look at price action here, it looks like we bounced from this demand zone one time already. So in our case, this is going to turn into a potential supply zone, right? So there could be a pullback from this area, validate the top end of 22.88 before continuing on to the upside, eventually converting this resistance into a support, and then continuing on to the upside if it does play all the right way. Okay, team. So now if we extend this to the left, I want to show you one more thing, and we have to be aware over how to practice many different strategies here in order for us to coin the continuation of price action the right way. If you do not know all the rules, make sure to study as much as you can so that you are a trader that has high versatility here, right, team? So take a look at this space between this wick here, this red wick. I'm going to go ahead and point it with an arrow, right, just like this. That wick and this wick down here, you can see this green wick, right, and this red wick. Now notice this, the candle in between, right? You're seeing a gap between those two candles, right? Not only that, is that you're getting a tweezer top here, right, wick, and you're getting a tweezer bottom here, wick and wick, right? That marks off a very important area. That is called a fair value gap. coined by the Inner Circle Trader, right? ICT. So this is actually used in more of a 5-minute, 4-minute, 3-minute time frame, maybe 2-minute time frames, but I know in Forex as well, right? So I noticed that this is also working in higher time frames in equities and traditional trading, right? So let's go ahead and make sure that we can identify the potentials of that. If we extend our range already, we're kind of in between that zone already, right, team? So we're going to put one more line there as the probability for continuation, just like this, right? So it's looking pretty good for us already. So there is a total range here of 25.21 to 27.37 that we're going to use as a resistance range, and we're likely going to turn this area here of about 25.54 from the fair value to about that 27.30. We're going to likely turn that into a support, bounce off of this area, and then continue towards the upside and face other resistances. Okay, team? So yes, we need to take a look at these things here. That would be your fair value gap or price imbalance, and we would be able to use that as resistance, and we'll be able to use it as support if we break above it. So remember, that's right in this area right here, right? So please be careful, team, as I know that this is going to be a little bit tough for us to get up there, but now we do not have the major options expiries in the way anymore. OPEX is done. That was this Friday. So now let's see if we're going to see how many people exercise their calls. Price action is going to essentially reflect that into the coming week, okay? Let's go ahead and take a look at, you know what? Let's go ahead and take a look at the options flow. Let's switch over the screens here and take a look at this now, right? Okay, so here is the screen that we're looking at from the opposing side, and I want you to notice here first that this is GME, right? I'm going to leave it like that. I'm going to leave it highlighted here, and I want you to also notice that we're in the matrix here to observe the volume, right? We're going to observe volume in you know what? We can actually do the open interest change, right? The percentage of the open interest change first, right? So notice here, 16th of August, in the strikes of $25, we're noticing that there is a 3,640% change, meaning that there are now added 3,600% calls to the 25 strike on the 16th of August, right? So now if we look down here, take a look at the changes, right? Look at this. On the 7th of June, $28 strikes, there has been an 1,100% change there. Take a look at this. This is a 1,300% change since, there's a 1,300% change to the 35 strikes on the 16th of August as well. And you'll be able to see huge changes leading up to larger targets. 43.50 for the 24th of May expiries, 5,000% change at the 43.50 strike. Guys, this is massive. Look at this right here, right? We're noticing on an almost 1,300% change to the 44.50s on the 24th of May. Oh my goodness, guys, look at this. 1,200% change on the calls for the 31st of May at the $66. Another 1,100% change on the 16th of August for the $70 targets. Guys, look at this. 2,800% at the $80 target, 700% at the 75 for the calls on the 16th of August, and look at this, another close to 5,000% change for the 120 targets for the calls of June 28th, right? And look at the, I mean, guys, I'm just expressing to you what I'm seeing here. Now let's take a look at the open interest for this, right? So open interest for options contracts quite literally means just that. It just means who's interested? How many people are interested, right? This, I know that if you look at the open interest, is gonna look similar in a lot of cases. So for example, here, the 21st of June. Okay, so just in case, right? I know I could have done this right here. This is your expiry, right? This is your call and your put. So meaning calls bet for the upside, puts bet for the downside, and these are your strikes, meaning where you're betting the price is gonna go, or where you're betting the price is gonna go from, right? So if you're betting from the $20 target, because we're in the money right now, right? That's going to be $21.30 that the market closed today. If you're betting from $20, that's great. You're betting that it's going to continue to the upside here. So that means that you're going to get a lot of intrinsic value as the price goes up, if it goes up. So what I want you to see is that, yes, there's going to be large numbers at the puts, but I want you to remember what we just noticed in the open interest change. Lots of red everywhere on the put side, right? The put side has minus everywhere. So there's a bunch of changes here, right, team? So I just want you to be aware of those negative numbers as they're changing and they're coming into the next week. This is why I want for you to observe this, right? So if we take a look right over here, look at the calls at 14,000 open interest at the $20 strike. If we go down, let's take a look at some larger numbers. Here is 7,600 open interest on the 30 strikes. And look at this, almost 20,000 open interest at a $40 strike for GME, and that's located at June 21st expiries. Guys, this is absolutely huge. Now look at this. Almost 16,700 open interest for the January 17th at $60 for GME. Let's see if we have any other incredible numbers up there. Nothing just yet, right? So yeah, guys, I just wanted to point that out to you. And the last part of the analysis today is you know what? Let's go ahead and take a look at the other screen here and see if we can see volatility versus momentum and see if the downside has already ceased to exist. Are we facing potential upside soon, right? So yes, it looks like we're already getting a slight uptick here in volatility. So remember, team, for those of you that have been observing me over the last few weeks, welcome to the ARCa Bulls channel, first of all, right? But this is my algorithm here. This is the Volatility Heat Map, and it is tracking volatility in linear. In other words, known as the disbursement of returns, right? So this is going to be your frequency of transactions. So yes, we are at a minimum here at the 5-minute time frame, and every single time you get this purple print of these bars, it means that it has been for a 5-minute period close below the 2% zone of critical contraction, right? So as long as it's below 2% and closing 5 minutes at a time, it is printing a bar there. So we have critically contracted down here. Usually that means that a potential explosive move could be happening soon, just like it did right here. And as you can see in the price action, if we observed right in this area, look at all that contraction here followed by a boom in price action, right? That usually is how it happens, right? A lot of contraction right here followed by that huge boom to the upside there. So that is what happens usually when we have high contraction with an upside bias on stochastic momentum. Remember, volatility does not give you the direction bias. This is only telling you how many transactions are happening short or long during that period of time. So we have almost nothing, and now we're getting a period of upside, and we're getting a slight tick of expansion here. So it's looking pretty damn good, okay, team? I want you to be careful how to trade when you trade the financial markets, especially on assets like this. Nice little green bar here on the 5-minute time frame. Yeah, let's look at the 10-minute time frame now. Okay, the 10-minute time frame is now starting to feel the upside pressure from the 5-minute time frame, but we are still contracting here. So at any moment, this is going to start switching towards an expansion phase for the upside. We just have to know how hard that thrust is going to be from the 5-minute. So far, guys, it's looking pretty good. You know the upside targets, you know the risks, and you know where to start learning how to trade. ArcMastersCourse at gmail.com. Make sure to get there immediately so that we can get you enrolled, as the enrollment for this is going to stop pretty soon. Okay, you guys, welcome to the new ArcMaster students, and welcome to the new trading team members as well. If any questions or concerns, you know where to reach me, team. But I love you all. Thank you so much for listening, and we will chat very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and or day, and I'll catch you at the bell on Monday. Adios.